There is millions of videos flooding all over saying how the SpaceX IPO is a bad idea and all these different stories and people's explanations and but nobody is truly explaining how you could trade it if you decide you want to. How could you actually be profitable from this SpaceX IPO? And throughout this video, I'm going to explain to you purely mathematical, purely statistical, explaining how to execute, how to win, and how to not get caught in a trap. And the most important date to watch for when you do enter the trade, and if you decide to hold on a little longer term basis. And when I say longer term, I am talking a couple months, because by August is when the big repricing is going to happen. So just stay tuned. I'm going to explain everything. Let's get straight into it.
Okay, first, the thing almost every headline gets wrong. When you buy SpaceX, you're not buying a rocket company. Back in February, SpaceX merged with XAI, Elon's AI company, which already owned X, the old Twitter. So the entity going public is SpaceX plus XAI plus X all in one. That's why the valuation exploded from around $350 billion to $1.77 trillion. Now you're buying rockets, a frontier AI lab, and a social network. And here's the part of the hype that skips it. Putting it all together, in 2025, this company did $18.7 billion in revenue, but lost $4.9 billion. The AI side alone burned $6.3 billion. Starlink is the crown jewel, $11 billion in revenue, growing 50%, 10 million subscribers. But even there, watch the detail, revenue per user is falling from $86 a month down to $66. And the debt, $29 billion, including a $20 billion bridge loan that has to be paid back out of the IPO money within 6 months. So a big chunk of that growth raise is actually to pay off its debt. One more thing is at $135 a share, you're paying about 14 times the company's book value. New investors put in nearly half the money for 4% of the company. That's the actual fundamentals of the company. Now let's actually talk about how it trades. Mechanic that costs retail money on every single hot IPO. The IPO price is $135, but you can't buy at $135 unless you have an allocation. Allocations go to institutions and a handful of brokers. You actually could have applied for an allocation through your broker, for example, Robinhood, and asked them to allocate you some, and based on their approval process, they could or could deny you. So the rest of us are actually trading in the open market. The open market doesn't open at 9:30. A brand new stock typically opens later, usually in the late morning or midday, through something called an IPO cross. Before that, there is absolutely no trading at all. There is no pre-market. So the stock actually opens. Who's actually selling you the shares that open? The people who got an allocation of $135 are typically flipping for an instant profit. That's it. The entire 4.2% float was handed out the night before, and the only day one sellers are the allocation holders who decided to cash in. Here's the kicker. The underwriters deliberately hand shares to the people that are long-term funds that won't flip it right away to support the price, so the actual sellable supply on day one is tiny. There is huge demand, but almost no supply, and the price gaps up until enough flippers get tempted to sell, which means if you throw in a market order at the open, you're not buying it at $135. You could be buying it at $200, $250, $300, wherever it gaps to. A market order says fill me at any price into a thin float IPO. That is literally how you end up buying the top. Now, will it keep going up? Let's not guess. Let's look at recent low float mega IPOs and see what actually happened. ARM Holdings, 2023 popped 25% day one. Within 8 weeks, it was trading below the IPO price. The first day high was the top for 3.5 months. Saudi Aramco, the closest thing to the SpaceX 1.5% float, hit a $2 trillion valuation on day two, and that was the high, down 29% over the next few months. Reddit in 2024 spiked 70% intraday on day one, then crashed to an all-time low a month later. Kenvue popped 22%, and that high held for over a year on the way down. See the pattern, low float IPOs pop on the first day, becoming a ceiling for months. Every single one. The few that actually went higher, ARM and Reddit, only did it months later on a blowout earnings report. And that's the dagger for SpaceX because its first earnings report is going to show a loss. And the exact catalyst that rescued the others is most likely going to confirm the fade here. Oh, and Morningstar pegs SpaceX fair valuation at $700 billion. That is less than half the IPO price. But here's why it doesn't just collapse on day two. There's a wave of forced buying coming. Index funds that have to buy it no matter the price. Around June 19th to June 20th, just 5 days after the IPO, the Vanguard Total Market and the Russell funds added. Then the big one, around early July, the NASDAQ 100 adds it in under a fast entry rule. This is probably what you've seen a lot of headlines about, talking about, oh, the NASDAQ updated its rules and all these different things. Yeah, this is exactly what they're talking about. So early July, what they're going to do is they're going to be the largest near-term buyer. Somewhere between $7 and $15 billion price blind demand, which means it will buy it at any single price that it's currently at. Added up, you've got around $10 to $25 billion of forced buying into the stock with almost no float. That's the fuel for the squeeze. What about the S&P 500, the biggest price? That's actually not happening anytime soon. The S&P requires profitability and this company loses money. That's a Q4 or later story, if even possible, but don't even bet on that. But notice the timing. All this forced buying is front-loaded into late June or early July, which sets up the most important part of this trade, the lockup. Right now, insiders, employees, early investors, they can't sell their shares. They are locked, and that is why the float is so thin. But that lockup doesn't last forever, and SpaceX's schedule is unusual. Let me give you the dates that matter. Around August 12, 70 days in, the first 7% of insider stock unlocks. That is the first real supply. But the big one comes on its first earnings report mid-August. That single event unlocks 20% of insider shares, and if the stock is up 30% or more, another 10% on top, that's up to 1.7 billion shares becoming sellable, landing on the exact same week as the first earnings report shows a multi-billion-dollar loss. Demand is front-loaded into early July, supply is backloaded into mid-August. See the gap? And one thing the headlines got wrong that you need to know, the 30% trigger is not a free accelerator. A lot of people think the stock rips, insiders get to dump early, but they don't. The price condition is tied to the earnings date. A rally before the earnings unlocks nothing. The supply is locked until mid-August no matter what the price does. Then it keeps coming in 7% tranches through September and October, another 28% at the November earnings report, and the rest at the 180-day mark around the end of November. And Elon himself, he's actually locked for a full 366 days. His 6.4 billion shares don't free up until June 2027. So the whole year has a rhythm. Demand now, supply later. Now, what if you don't want to touch SpaceX directly? There are funds that hold SpaceX, but they're not created equal, and this is where the edge lays. DXYZ, the one everyone's piling into, is actually trading at a 76% premium to what it owns. When SpaceX goes public, when the value is actually confirmed, that premium has every reason to collapse. This is classic textbook sell the news short, not a way to play the upside. STCK on the Toronto Exchange has a 32% holding of its SpaceX, the biggest concentration out there, with a huge remark coming, but its book value only updates quarterly, around August. So on the IPO day, it moves on hype, not mechanics, high octane but laggy premium. And then there is XOVR, XOVR, the one clean mechanical way to ride the move. It's an ETF, it trades at fair value in real time, and it remarks its SpaceX stake to the live price the moment SpaceX trades. Here's the clean move. XOVR currently values its SpaceX at 1.55 trillion. The IPO is at 1.77 trillion. So the math is simple. For every $10 SpaceX trades, XOVR value moves up around 23 cents. If SpaceX opens around $200, that's roughly a 9.5% pop in XOVR, automatically no allocation needed already at trading day. The catch that you have to respect is XOVR's whole appeal was being rare way to own SpaceX. Once SpaceX is public, that scarcity disappears. So its premium can compress while the value rises, eating into your pop. So the rule with XOVR is dead simple. Only buy it at the fair value, never at a premium. Now, you might be thinking to yourself, how do you get it at a fair value? Well, honestly, over the last 365 days, it actually went below or right at its fair value many times, nearly 1/3 of the time. So you just have to check its price against what it actually owns before you touch it. Putting it all together, here's the playbook. The best entry is the allocation. Request shares at 135 through Robinhood, SoFi, Schwab, Fidelity, E-Trade. Before June 11th, even a small fill lets you sell into the pop instead of becoming the pop. If you chase the open, use limit orders, never market orders, and sell fast. Don't get greedy and expecting it to constantly keep rallying, and don't feel FOMO if you do watch it rallying and your limit orders didn't fill. The first day pump is front loaded and fades into the close. Be early, take the spike, don't marry it. XOVR is the clean, gear down ride, but only at fair value, never traded at a premium. The calendar is the edge. June 12th, the pop. Mid to late June into early late July is the index buying wave. Ride it, fade the index ad, closes. Early July, the demand runs dry, and that's the turn. Mid-August, the supply wall becomes the first loss, marking earnings. That is your primary fade date, meaning if you do get in before then, you really want to exit or de-risk your position significantly before that mid-August point. DXYZ is seldom used short on that 76% premium. The whole thing in one sentence, demand is front-loaded, supply is back-loaded, and the gap closes in mid-August. Pop, squeeze, fade. Trade the structure, don't fall for the hype. The mechanics of this IPO favor people who built it. Now you know how it's wired, the dates, the supply, and the cleanest way in this. If this saved you from market buying at open, smash the like, subscribe, and I'll be tracking this live IPO date, the index ads, and the mid-August wall. Now, just to recap one last time, and I'm going to be pulling the live prices for each stock right now. XOVR is trading at 1958, and DXYZ is trading at 41.79. So now you have these two prices during this video as I'm recording this, so we're able to backtrack and see how we performed when the IPO is completed. Thank you very much for watching. Have a great